Hi everyone, welcome to FinTech Academy. This is Harsh. Today I will go over Accounting and Bookkeeping Fundamentals Part 3 in this video tutorial. This is a three-part video tutorial, with this being the third part of the three. In this part, we will understand the debits and credits, what are T accounts, journalizing transactions, and importance of source documents. In the part 1, we had covered about the section which was what is assets, liabilities, and owner's equity, the definitions of the same, and we also went through the fundamental bookkeeping equation. In the part 2, we had a look further more detail what it is about the revenue and expenses accounts, and we studied about the expanded equation and how it works. In this part, we will be exploring further the expanded equation and going over the topics which are right on the screen, i.e. debits and credits, T accounts, journalizing transactions, and importance of source documents. All right, let's get started. All right, so understanding debits and credits. Although transactions can be recorded using the bookkeeping equation, it is not practical to use this method for several reasons. One of the reasons is businesses deal with many transactions every day. The expanded equation remains as a point of reference. The expanded equation is A plus E plus D, which is assets plus expenses plus drawings, equal to L plus R plus C, which is liabilities plus revenues plus capital, with assets, expenses, drawings being on the left side of the equation and liabilities, revenues, capital being on the right side of the equation. And the ones which are on the left side, they have the default balance as debit. The ones on the right are the ones which have the default balance as credit. Note that the left side of the equation must equal the right side after each transaction has been recorded. The terms left and right can be replaced with debit and credit. In bookkeeping, debit refers to the left side of the equation and credit refers to the right side of the equation. Accounts that fall under the categories on the left side of the equation are referred to as debit accounts, and those that fall under the right side are referred to as credit accounts. Therefore, all assets, expenses, and drawings are debits, and all liabilities, revenues, and capital are credits. For example, cash is an asset, so it is a debit. Accounts payable is a liability, so it is a credit. All of the accounts in a business can be referenced in this way. An increase in cash is a debit to cash. A decrease in cash is a credit to the cash account. What are the T accounts? Accountants often use a form called a T account because it resembles a large letter T to illustrate the impact of a transaction on each account. The account title is written on top of the T. The left side is labeled debit and the right side is labeled credit. The left side, like this over here in this example, right, which is labeled debit, and the right side is credit. The account name is right on the top in this case, which is cash. All assets would appear as debit balances. Since the cash account is on the left side of the expanded equation, cash will increase on the debit side of its account, as indicated by the plus sign. So we can see over here, plus is on the debit side because AED, assets, expenses, and drawings, they are on the left side of the equation, which is debit. Now the opposite is credit, which is minus. That's when the amount sits over there, cash will be reduced from the account. Cash will increase on the left side of its account as indicated by the plus sign. A minus sign indicates that decreases to cash are entered on the right side. The left side is the debit side, the right side is the credit side. So that's what is illustrated over here. Cash being assets, and assets is a part of the debit default, so plus is over here on the left side. all liabilities would appear as a credit balance. So basically liabilities, revenues and capital are on the right side of the equation, and they have the balance as default as credit. Liabilities and capital are located on the right side of the bookkeeping equation. So increases to these accounts would be recorded on the credit side of the T account, as indicated by the plus sign. Decreases to these accounts are recorded on the debit side. So basically it's opposite. If we look over here, notes payable increases because it's a liability when it is having credit. So plus is on the credit side. This example is 5,200, where it will decrease when there is a debit side, which is minus. So generally, if let's say there's an example that we borrowed loan from the bank, so we say debit to bank because the bank is a part of a asset, so it will be debited and the money is coming in, but at the same time our liability is also going up, so we'll be crediting, let's say, notes payable or bank loan, whichever account name. So there is a plus over here as well. So in this example, what will happen, we will see assets will go up, but at the same time we will also see that the notes payable, which is a liability, will also go up. Let's see another example. Capital account, debit is minus on the of course on the left side, and credit is plus on the right side. So 14,800, let's say the owner has invested 14,800 in the business, so debit will be again to the bank and credit will be to the capital account. Both of them will increase. Capital account will increase because it is being credited on the right side of the equation. If there is a debit to capital account, then it will reduce, because that means that probably there could be a loss or there could be a withdrawal that has been done. Journalizing transactions. Rather than recording transactions using the equation method, accountants use journals to keep track of all financial institutions. A journal is a book of the original entry where complete information about the transaction is first recorded. Each page is numbered. Columns provide space for a complete date, year, month, day, names of the accounts debited and credited, posting references and amount columns for debits and for credits. So all these information is recorded in the journal book of original entry. Recall that every transaction must have at least one debit and one credit so that the equation remains in balance and debits are equal to credits. When recording a transaction in the general journal, always put the debit account first and the credit account below it. All entries are recorded in chronological order as they occur. All information, the date of the transaction, the accounts involved, the amount of each debit and each credit, and any needed explanation are included in this book called the General Journal. All right, let's see an example over here. So we have this general journal. On the top right, we have page 1. So let's say that's the page number 1 of the journal. And we have the transaction on September 4th of the year, debit to cash, and $2,500 is the amount, and credit as an example over here is Jane Rowling capital account, which is $2,500. That is an investment by the owner. So if we recall the T account over here, we can see that cash is getting debited, right? So it will be on the left side of the T account as well as on the left side of the equation, which is going to be increasing, and Jane Rowling capital is going to be on the right side of the equation, which is the capital, and in the T account as well, it will show that it is going to increase because the nature of that account is default credit, which is on the right side of the equation. The second transaction, 7th of September, let's say, debit to supplies $100 and credit to cash, which is $100, and the check was given, let's say, number 100. So if we put it this way, the supplies is, let's say, an asset over here, $100, which will be debited, and cash, which is also going to be on the same side, which is going to be credited because the money is going out. So overall, fall in this impact if the supplies are debiting 100 and crediting cash, then there will be no impact of change on the asset side. Plus 100 on the asset side, minus 100 on the asset side. The general journal illustrates two transactions entered in chronological order on page 1 as noted in the upper right corner of the journal. The first transaction dated September 4 is for a $2,500 cash investment in the business made by the owner, Jane Rowling. Before recording a transaction, think about which accounts are affected. Remember that all accounts affect at least two accounts. All transactions affect at least two accounts. Under account title, enter the name of the accounts being affected. The debit account must be recorded first and the credit account is written on the line below the debit. It is important to note the correct placement of each account title. Debited accounts are written right next to the line that separates the date column, but the credited accounts are indented half an inch. A quick recap: in every transaction, debits equal credits. Journal entries are listed chronologically. Debit accounts and amounts are always listed first in journal entries. Credit accounts are indented half an inch following debits. Be sure that each journal entry has at least one debit and one credit. Verify that total debits equal to total credits. In every entry, debit equals credits. If you found this video helpful, please like our video and subscribe to our channel for more videos. Also, let me know in comments what would you like to see in future videos, i.e. Hirsch, I want to see this video, or Hirsch, can you make this video on this topic for QuickBooks Desktop, QuickBooks Online, or Accounting and Bookkeeping. Alternatively, you can visit us at fintechsolutions.ca for our courses. Thanks for watching.